Hello, everyone. I'm Kevin Erb. I'm an attorney in Husch Blackwell's tax practice group in Dallas. Before we begin, I'd like to cover a few housekeeping items. At the bottom of your attendance console, there are multiple application icons for your use during the program today. If you have a question during the webcast, please submit via the question box. We will try to answer all questions during the webcast today, but if a fuller answer is needed or we run out of time, it will be answered later via email. A PDF of the presentation is available in the Program Materials folder. This program has been approved for legal education hours. For live attendees, report your hours by clicking on the CEU icon at the bottom of the screen. A certificate of attendance, including course numbers, will be emailed to you tomorrow, along with a recording of the webcast for watching and sharing. Towards the end of the program, be sure to complete our short survey. We use your feedback to plan future programs that are applicable to your business needs. That's it for housekeeping items. Let's get started with our program. So we have 3 speakers today, and joining me today are Jordan Alt, Doug Jones, and Jameson Sauceda. Jordan helped launch the firm's nonprofit organizations and religious institutions team. In this role, Jordan advised nonprofit and religious clients on a variety of issues, from litigation and employment disputes to tax and real estate issues. Doug counsels businesses on complex tax structures and guides nonprofits on tax exemption. Doug's experience in tax law includes practical strategies for clients regarding mergers, acquisitions, joint ventures, workouts, recapitalizations, divestitures, spin-offs, entity formation, as well as all forms of capital raising activities. Jameson uses his tax and corporate background to help clients navigate complex regulatory issues and transactions. He has developed skills for helping for-profit and nonprofit clients with a wide variety of corporate and tax issues, ranging from corporate governance and transactional matters to assistance with federal and state tax incentive programs, such as the Texas Enterprise Zone program. With that being said, we'll begin our discussion of Form 990. So we're going to start out with just a brief overview about what Form 990 is, who will read Form 990, what are reviewers looking for, and filing obligations.
So so what is Form 990? Form 990 is an information return. Tax-exempt entities obviously are not primary taxpayers. So it is a return that collects information about the entity and its activities. And it includes all kinds of information about activities, about revenue, about assets. The kind of length and complexity can vary depending on the size of the organization. There's the 990EZ, which is available for entities with gross receipts of less than $200,000 a year and assets of less than $500,000. And there's a form for even smaller entities called the 990N, which is available for entities which don't file an EZ and have gross receipts of less than $50,000 a year. In addition to that, there's also a bunch of schedules, and there's the 990T, which is for reporting unrelated business taxable income. We're going to come back and discuss that topic a little bit more later, that is the one area or one circumstance in which tax-exempt entity will actually be a taxpayer is if they have unrelated business taxable income. They do pay tax on that income. So that kind of sets the basis of kind of what the form is and what the various versions are.
So I'm going to talk a little bit about who reads Form 990. I'm going to start with a little caveat that even though I do a lot of work with nonprofits, I am first and foremost a litigator. I'm not a tax attorney. When I get complex tax questions, I send them down to TextList, to the other individuals you see on the screen. But that said, in my role, working with a lot of boards of directors of tax-exempt entities, I do spend a lot of time working with Form 990. So who will read it? You need to know that Form 990 is public. It is generally available. Actually, tax-exempt nonprofits are required, if they are requested to do so, to provide copies of the 3 most recently filed returns. What I found is a lot of larger tax-exempt clients just opt to put their Form 990 on their website. Oftentimes, there's an About Us section on a website that you can click on, and find that information. Whether or not you do that, I think obviously depends on the size of the entity. It depends on who you think might be looking at your 990, how many requests you get. If you are curious about your own 990, if you are curious about others, it's fairly easy to find on the IRS website. It's actually apps, apps.irs.gov /app/EOS. EOS. Or if you're like me, you just Google IRS 990 search and it'll get you there every single time. So who's actually going to read this thing? You have to know your audience. First and foremost, this is a filing that you're filing with the IRS, so you have to assume it's going to be read by the IRS. Any financial information that goes in there has to be accurate. But it's not just the IRS that's going to be looking at this. I came up with a list of other entities. Obviously, other agencies or peer organizations sometimes are interested in what you are doing. The 990 is going to talk a little bit about your mission. It's going to talk about your financial health. But a lot of organizations, and that's something we'll talk about today, will use the 990 to basically talk not only about their mission, but how they are furthering that mission, the successes that they've had over the last year. Also information about not only their finances, but about executive compensation, who their board members are, how long their board members are spending on work related to the organization on a monthly basis. In addition, a lot of donors are going to want to know about your organization. I will say this, admitting that I'm pretty nerdy about this, but if I get an invitation to a gala or a fundraiser to an organization that I'm interested in what they're doing, but I've never really worked with them before, it's one of the places that I go. I go to their website to learn about them. I will click on their 990. Not that everybody knows to do that, but I find it helpful to get a sense of, what's going on in the organization. Who is involved? Do I know anybody on the board? What does their compensation look like? How much of their money is actually going out to the mission rather than going to other, going to compensation, for example. Lenders, if you need to go to the bank to get a loan, they're probably going to want to see this information. Sometimes reporters are going to need this. Whether it's good or bad, if your organization is in the spotlight, it's not unusual for reporters to pull this information. And so you'll see information about your mission, about who's on the board, about your financial health. Again, that's going to be public information, and news agencies can pull that. Contractors, vendors, again, I do a lot of legal work for nonprofit organizations. If somebody calls me for their services, it's good to get a sense of who they are, how big they are, what their financial health is. And other contractors and vendors are likely going to be in the same boat. If you're looking to hire someone, particularly if you are looking to hire someone at the executive level, information about compensation of key individuals may be included in your 990. So again, that's going to be public. I found that sometimes executive directors are a little surprised that their compensation may be made public, but it's something you should be aware of, and something that you should be aware that potential candidates may find as well. And then the last thing that I will throw out here, I just loosely define this group as trolls. If you have individuals that are unhappy with your organization for any reason, sometimes they dig in to see who you are, to raise claims against you, to raise arguments against you. I've seen this a little bit in Missouri, unfortunately, particularly when, whether they like it or not, nonprofit clients kind of get pulled into the political sphere. Then Form 990 has been used to really call into question the work that they're doing, which is, again, why it's important to tell a good story that you can share with the public. So I'll kick it over to I think, Jameson's up next.
Yeah, and so I'll kind of touch on many of those items. It kind of goes hand in hand with, what information are they looking for, and particularly the IRS. And it really boils down to probably three things: is what are the organization's activities, who's involved with it, whether it's interested persons, people from your board, people with service offices, and then what are your expenditures related to those activities, right? And so the first one, being mindful of your activities as an exempt organization, everything your purpose in every activity that you do should be furthering your exempt purpose, right? And so when describing that in the form, you have to be mindful of that. What's going to raise people's eyebrows is, well, let's say we have a tax-exempt hospital that for whatever reason is involved in, maybe rental activities or some other sort of activity that's not generally or squarely fit into their exempt purpose of providing healthcare. Well, that's not only going to tip off the IRS to maybe ask more questions, but also people that Jordan mentioned who may want to investigate further into those activities. As far as interested persons, it's really the transactions that are going on between those people, whether it's compensation or one of the board members happens to own an entity which you contract for services or for equipment. What are the parameters around that? Is there a conflict of interest policy in place that avoids private endearment of that individual? And then expenditures, we go back to the exempt purposes. Is the majority of your money being used to further those exempt purposes? And if not, why, right? There may be a perfectly good explanation as to why you have a rental property. Maybe it's low-income housing. Maybe it's used to, supplement the expenditures, right, for the exempt purposes. And so being mindful of those, unique situations when you're filling out the Form 990 or reviewing the Form 990 is particularly valuable for a whole host of reasons, including the IRS reviewing it, and also those outsiders who are looking to see what is this organization about. I think along those lines, it's important to be mindful for people reviewing these and responsible for putting the Form 990 together to take a step back and look at what their exempt purposes are per the governing documents, the formation documents, and make sure that that's still consistent with your current activities. And if it's not, perhaps looking to change or make those more consistent. So with that, I'll go ahead and pass it off back to Doug about who files these and when.
And I may chime in here real quick if you don't mind, Doug, because we've gotten a couple of questions about the slides. I will tell you that we're going through some introductory material here, and then we're going to go through some key areas to focus on. So we really don't have much of a slide deck, or really any of a slide deck other than the title slide and then a slide that says questions at the end. So if you are not seeing those materials, it's not your fault. We just don't have a slide deck that goes along with this. We're just going to capture it kind of in a more of a discussion format. One other question that came up asking whether anyone can request a Form 990, and my assumption is, or my understanding is yes. If any individual, it doesn't have to be a donor, it doesn't have to be a board member, it doesn't have to be a reporter. If you get that request, you have an obligation to make that available. Sorry to interrupt. I'll kick it over to you.
Go ahead, Doug.
Good. Yeah, so, excuse me. One thing to piggyback off of what Jameson just said about, updating the exempt purpose, that's something you can do for free. You don't need to, well, the Secretary of State might charge you a small fee to update the certificate of formation, but you don't need to go to the IRS and say, IRS, is my change to the exempt purpose okay? Am I still an exempt, 501c3? You just do it. And it's a good thing, as he was saying, to update accordingly, because your mission creep may happen, and the scope of your purposes may be growing, and if it grows beyond the language describing your exempt purpose, it's problematic. Even if it goes beyond into an area that's a charitable, religious, scientific, or approved kind of activity. So it's a good thing to keep your thumb on. Now, quickly before we go on to some other topics, we'll briefly discuss who has to file 990 and when. All organizations exempt under 501A, so that's your 501c3, 4, 6, all of the C's, unless they're specifically exempted. A lot of religious organizations are exempted from filing 990s, and one thing people will mess up is that, now that we are in a world where the IRS can take 12 to 18 months to get back to you on a determination letter, 990 needs to be filed before even if a determination letter has not been received. So that's something that'll happen once you get your 1023 in, your application for tax exemption, then your 990s will start being filed. And it's due on the 15th day of the 5th month following the end of the year. So for calendar years, it'll be May 15th.
Interestingly, I just got one approved in 3 months, which was good. I was very, very surprised.
Jameson can do it in 3 months.
I do not guarantee 3 months. Let's just throw that out there. The other thing I will say is that, to piggyback off of Jordan's comment, you can not only just go to the IRS website, but there are other nonprofit entities specifically organized around providing these Form 990s in various, organizations, including probably one of the most popular, which is GuideStar. And that anyone can go on, type in the EIN, type in the name of it, and search to find Form 990s. Sometimes they have it, most times they do, but it'll also describe, who's in power, who's the CEO, who's the CFO, and so it's pretty easily available. The other thing I will mention, as Doug alluded to, is that although most religious organizations are exempt from filing the 990, that does not mean that they're subsidiary organizations. For instance, they create a subsidiary to hold church property. That does not mean that they are automatically exempt. You have to request that whenever you fill out the Form 2023. And the IRS obviously takes all facts and circumstances into consideration when doing that. But that is something also to be mindful if you have subsidiary organizations that don't automatically qualify. I think, go ahead, Kevin, I'll kick it back to you.
Right. So there are certain questions that various board members or officers have about what are some duties that I have, what should I be looking for when I review this form, what do I need to, what's my part in this process? And so I think Jordan's going to take a stab at answering some of those questions.
Absolutely. So I will say that I kind of dipped my toes in this water by serving on boards before I started doing legal work for boards. And I'm kind of ashamed to say it was years of serving on boards before I even knew what a 990 was or was asked to review one, which isn't ideal, but I think it is kind of par for the course. There is no formal requirement that boards have to do X, Y, and Z in preparing a 990, but we do believe, and I tell my clients, it is good governance to do that. There is, because it's a tax form, it's part 6, line 11A, which seems like IRS speak, that it's so specific like that. It does ask whether the organization provided a complete copy of this Form 990 to all members of its governing body before filing. So that is something that you will have to review and check off. So you do want to make sure that at the very least, your board of directors has the opportunity to review this. Now, I typically recommend that there is an established process in place, that it's not just the executive director throwing this together at the 11th hour and getting it filed, but that it goes through a finance committee, an audit committee, an accountant, your attorney, whoever may be looking at this, well in advance of the due date, so everybody does have an opportunity to review, to reflect on it, and to comment. Specifically, why for directors? Because the board should be overseeing both the financial aspects of the administration of the nonprofit, but also how the nonprofit is pursuing its mission. And that's one of the questions that you're going to have to answer. You're going to have to state that, or you should at least be stating that in the 990 to talk about your mission and what you're doing. So the board should be able to review how you are communicating your mission, your activities, and critically the successes that you've had over the last year. Remembering that it's not just folks from the IRS reviewing this, but it's going to be other organizations, it's going to be donors, it's going to be foundations that you may be looking at getting grant money from. So what duties do board members have? Well, all directors owe fiduciary duties to the nonprofit and to related parties of the nonprofit. the directors are charged with determining the strategic direction of the organization and overseeing its management, which in my view would include a lot of the information that's going into the 990. It's also charged with ensuring compliance with policies and regulations and other laws, all of which kind of lead me to the conclusion when I work with clients that yes, your board should be playing a role in the development and the review of the 990. Every board member has a fiduciary duty of care to the corporation, which means that you need to keep apprised of and understand the financial and executive reports that are given to you, strategic initiatives, budgets, documents like that. That includes a duty to inquire into matters of concern. One of the things you'll see in the 990 is there's kind of a year-over-year change in the financial health. If there's a significant change in the financial health of the organization that you're not seeing in the monthly reports going to the board, that's a question you need to be asking. Or if you are in an executive role, that's a question that you need to be ready to answer to your board. So how does that duty of care apply to Form 990? You don't necessarily have to have board members review every line. You don't have to have every board member participating or filling things out, but generally you should have a committee or subcommittee of the board charged with verifying that the organization is not engaging in any unsound practices, is not failing to comply with the law, and is financially healthy. Your board members all have a duty to understand the financial health of the organization. So it's important for you to make sure that they have this information well before it's filed. And I think it's generally good practice after the 990 is filed to make sure that all board members have a complete copy of that at their disposal if they choose to review it.
And then, Jordan, I'm actually going to stop and address one of the questions we got about refiling tax exemptions. So the question is, how often should organizations refile for their tax exemption? And you don't necessarily refile it on an annual basis or a yearly basis. What happens is when you initially form or you decide to be an exempt organization, you submit an application to the IRS and ask for a determination letter. Once you receive that, you're officially recognized as tax exempt from the IRS, right? And when you obviously, one, you should keep that on file for the duration of the organization's life, but also update it or request that it be updated when certain things happen. For instance, I have a lot of organizations that change their name. If you change your name, you should request a new determination letter and you provide them with the governance documents or the formation documents from the state, and they update your name. That's good for a couple of purposes. One of which, for many healthcare organizations, and I find this more often than not, is they were exempt back in 1923 or whatever, and they still are operating with names that with the original name, but they've changed their name 4 or 5 times, and that's particularly troublesome with organizations like CMS or even state regulatory authorities that want a copy with the correct name, the correct EIN. And so having a regular process in place or getting that every time your name has changed is good practice in keeping those on file. And so unless something like that changes, you won't need to get a new determination or what they call is an affirmation letter, right? They're affirming that you are still an exempt organization in the IRS's mind. Then I think the next section we're going to focus on is kind of key areas to focus on in the 990. I think we've probably already alluded to this, but the main areas of concern are activities, your financial information, governance, management, compensation, as well as the schedules that are involved with that. And so I'll touch on a few of those, and then I'll pass it over to Doug on those. And I think the two that I'm going to talk about, one is obviously your purpose and activities go hand in hand. So throughout the document, that's kind of the overarching theme, right? Is to make sure that all your activities and expenditures are in line with your purpose. And so when reviewing that, any changes that are made to your, not only your purpose, but your mission should be reflected in the 990. And when they are, the form specifically asked you to provide additional information, usually in Schedule O, which can be a whole range of page ranges, to kind of give an idea as to what changed and why it changed, right? Did you expand your services? Did you expand geographically? Things of that nature. So that's one thing to be particularly mindful, because that really kind of drives the rest of the form. And then the other thing to look at is, well, in comparison to last year, what has changed year over year, right? Whether it's through the mission or your financials, and how those activities have changed. Many people decide, hey, we're going to go ahead and start offering these additional services. But again, like Doug had said, that's not reflected in their mission or their exempt purposes in their governance documents. And based on those questions that they ask in the 990, if you, for instance, say, yes, we've changed our purpose, but we don't go in and describe it in Schedule O, well, that's a reason for IRS to maybe pursue an audit, right? And the reason I'm I guess not hesitant, but you want to be mindful of that is just because you, for example, you get audited on one little question or one little response, that may lead to further down the line. So if, for instance, you're in a situation where you get an audit letter from the IRS and they're, concerned about your response to changes in program activities. Well, they don't just focus on that. Initially they will send you a request for more information on that area, but down the line, depending on those responses, they may be able to ask additional questions. And so, being mindful that in part 3 of the form, accurately describing your exempt purposes and your activities is something that board members should be particularly mindful of. I'll go ahead and kick it off to Doug to talk about the financial information.
Yeah, so a big part of the 990 is the financial information. And we have a great segue into one of the questions here, too, because we have a question from the audience about audits and when they are necessary. So one thing to think about when you're reviewing the 990 is, okay, well, have we had an independent audit or some other review from an accounting firm of the financial statements? And there's different levels. The highest is an audit, and there can be a review, and it depends on the firm you're working with, but you can get a different level of kind of review, different scope of work that they perform. And the 990 does not have a requirement that it includes audited financial statements or reviewed financial statements. The organization can prepare its financial statements in-house and submit them on the 990, and then off it goes to the IRS and whoever else is looking at it. But something to consider about is, well, should the financial statements be reviewed? There's no IRS requirement that there be an audit, but there are other requirements that can make an audit be worthwhile. One that is frequently encountered is a donor may require it. That's a conversation that you can have with a donor. Sometimes an audit may not be necessary if it's not something the organization has been doing, but perhaps a review will suffice. And that's something that can be kind of negotiated. So that's right. So the first thing is what level of outside analysis has been performed on the financial statements. Then if there has been some kind of outside review of the financial statements, the next question is, okay, well, what do we do with this? Best practice probably would be to, as Jordan mentioned, would be to have either a committee or a subcommittee whose jurisdiction encompasses the financial statements in the 990, and they would be a good committee to take the results received from the auditors or the reviewers or whatever they're doing, and then act on them in some way, or say, okay, this is good, we're ready to submit. Outside of setting aside the outside kind of audit question for a minute. So once you have the revenue data in front of you, what are some things you should be looking for? Well, one thing is, and this is not a tax point at all, but just a general business point, you're looking at your revenue sources and you're going to be considering, am I not diversified enough? Because if you have one major revenue source, which is subject to risk of a poor economy or some other kind of contingency happening, which is going to downwardly adjust that revenue, that's a big risk for your organization. It's one you should be aware of. And having all of that information in front of you every year is a good chance to look at this and say, okay, we might need to think about diversification, or we think we're diversified well enough. Another thing that is going to become obvious to you as you are reviewing the financial information in the 990 is how much UBTI you have. So UBTI, again, that's unrelated business taxable income, is a tax that tax exempts pay on activities performed outside of their exempt purpose. It used to be that there was an absolute prohibition on tax exempt entities from doing anything or making any income from outside of their exempt purpose. Now, instead, tax exempts are free to do this. So if you are an animal shelter, you can set up a dog park, fee-based dog park or something like that, and people can come. And if that happens to be outside of your exempt purpose, then you'll pay tax on it. It's not going to destroy your tax exemption, but you're just going to be paying tax on the income that is received from outside of your exempt purpose. And there's all sorts of exceptions, and there are exceptions to the exceptions in this area, so it gets complicated. But know that, having UBTI and paying tax on it in most cases is not the end of the world. You will report it, you will pay tax on it. And at the end of the day, it's going to be a good thing for your organization because you're going to have a revenue stream, albeit one net of tax, that you can then use to fund your operations. However, if you have too much UBTI, you do run into a problem. And this is one of those areas where we do not have a clear, bright line percentage number to tell you if you have this much, it's too much, and if you have less than that, you're fine. It is a facts and circumstances kind of analysis. People throw around different rules of thumb for how much is too much, but if it's starting to become significant and then more significant, it's time to have that conversation with your tax advisors. There are things you can do to structure around this issue. You can think about setting up a for-profit subsidiary, and this is beyond the scope of this conversation, but for purposes of today, it's something that you need to keep an eye on. And if it starts growing and you think it may grow more in the future, talk to your tax advisors and hopefully do it before it becomes worryingly large, because there will be more structuring opportunities to fix the problem prospectively than retrospectively. Another thing which the 990 is going to allow you to focus on in clear detail is compensation. So, obviously the compensation is going to be public for certain of your highly paid employees. And there is nothing wrong with tax-exempt entities paying their employees a reasonable market rate for compensation. And that reasonable market rate can, for large organizations, be rather high. But the issue that we're kind of approaching here is one of private inurement. So one thing that tax-exempt organizations absolutely cannot do, money goes in and it is devoted to the exempt purpose, full stop. And if you have some of that money enriching insiders, maybe you're paying higher than market compensation to some of your employees or board members, that's a big problem. The compensation income is going to be right there in the 990. And it's an opportunity for people to look at it and think, okay, how did we set that compensation? Did we look at other organizations and what they are paying comparable employees? Did we document that search and that research that we did? Because if you did it and you didn't document it and you explained to the IRS, we did it, And the first thing they're going to ask you is, okay, prove it to us. Show us the documents. So this is an opportunity to make sure that you think your compensation is at a good level, and that you have gone through the process of making sure the compensation you're paying is market. And in addition to that, you've made sure that you've documented that process, because that will be, if you ever need that information or those documents, you'll be very happy that you have. Another thing to look at, and this also touches on the private inurement topic, are the expenses of the organization. So, with compensation, it's private inurement kind of for insiders, the employees and the directors. That's not the only kind of inurement that could be problematic. If you have a supplier that you are paying in excess of market rates for their goods or for their services, that's a problem. And you could, even though that person is outside of your organization, it's still private inurement. And it can result in, if it happens, it can result in the loss of tax exemption. So again, it's a good opportunity to look at, what are our expenses? Are they out of line? Do we think they're good? Have we gone through the process of making sure we're paying market rates? Did we negotiate it on arm's length? Did we documented it? All that stuff.
And one thing to also kind of touch on there is, a lot of people don't realize that even like use of the organization's buildings or things like that of an individual can also qualify, even though you won't see that as an expense line of revenue or compensation per se. Those things do happen where, hey, we're going to let such and such board member host something here or whatever, and there's no documentation as to why they let them or whether that was for a fee or not. Those issues do arise, and you should be mindful of them, that even those types of benefits can risk their exempt status.
Mm-hmm. Yeah, you will also be able to see on there fundraising expenses and other general expenses. So all of that information is good stuff and is worthwhile. The board or its committee or subcommittee or whatever that's reviewing this thing can really, spending some time with those numbers and making sure they all make sense. And I think I'm now going to turn it over to Jameson to talk about some governance and management issues.
Yeah, thanks. And then, so I'll kind of touch, we have a couple of questions. One, I'll go back to the audit question that Doug mentioned, particularly involving an association that has a related foundation, and whether or not audits, should be required of both. Not necessarily, but at the same time, these two organizations, a C6 versus a C3, have different rules, right? For instance, especially around like lobbying activities or grant making activities. And to the extent your 501c3 is doing grant making or lobbying activities, perhaps you should get a consultant on which organization should be doing what, right? Because just because the foundation or the association is in compliance, that doesn't mean that the other organization by default is. So that's one. Two, the other question was, should you be documenting compensation surveys that are done? Absolutely. Whether that's just in the form of discussing it in the minutes or having the actual surveys put into the minutes. Many of the organizations, and I'm pretty sure it's also a question on the 990, is what is the process for approving compensation? Is it reviewed by the board? Do you get a survey done? And the whole, I guess, reason for that is to determine whether or not it's fair market value. Are you paying higher than market rate, or are you, doing your due diligence to make sure that you're paying fair market value? So they should absolutely be documented at the very minimum in the minutes. And that kind of segues into the next topic that I'm talking about, which is governance and management. I think, again, the biggest point being document, right? If you're unsure about whether something should be documented in the minutes or not, just go ahead and document it, because you, like Doug said, you'll be thankful for it later. A couple of the biggest things to have in place are policies, right? You want a sound conflict of interest policy. There's one on the IRS website that's a form one. You can use that. Great. If you don't want it and you want one that's a little bit more tailored, you can edit it. But please, have that in place. Also, make sure you're following it. Just because you have the conflict of interest policy, that doesn't mean that all organizations, adopt that policy. If there's a conflict, whether you have a procedure to exclude that member from voting, or so be it, have that documented in the minutes that you've done that and you reviewed the conflict of interest policy. The other thing, like we mentioned, compensation. There should be a policy around compensation and a process, whether that's through an executive committee or by the full board. It really doesn't matter as long as you have one and you're abiding by it. And then another topic around just general governance is, if you're operating across state lines, be sure to be mindful of the rules and the registration requirements for those states. Just because you're authorized to do business in Texas doesn't mean that you can go open up an office in Colorado or Mexico. Those rules may be different, and they will require you doing certain filings in that state. The other item to be mindful with that is, just because you're an exempt organization and qualify for exemption in one state doesn't mean you automatically qualify in the other state. You'll have to do certain filings and requirements, particularly around not only the organization but even property that you hold in that state. So those are a couple of governance management topics to consider. But like I said, the main crux of it is to make sure you're documenting it, whether it be in the minutes or otherwise. Then I'll pass it on to kind of give you a little bit more about compensation, which is always a fun topic.
Yeah, so I already kind of touched on this in the financial information, but again, with compensation, all that's going to be listed in the 990. You can find some of it in the financial section, some of it in its own section. But the importance is, make sure you're paying market rates and make sure you're documenting. And I've said that and I've said it again, so now we'll move on to another thing. Another thing which can come up is kind of the employment status or lack thereof of the employees and independent contractors of the entity. So this is an issue that comes up for every business and nonprofit, because there is an incentive to call someone an independent contractor. The entity receiving the services, paying for the person, will save some money on the self-employment employer portion of payroll taxes, and it can even be beneficial for the independent contractor as well. So there's lots of people who are trying to treat someone who really should be an employee as an independent contractor. Maybe they've started out small, and maybe they really were an independent contractor to begin with, but as things grew, it's becoming less and less of a tenable position. The analysis you have to run through, it's kind of outside of the scope of this webinar, but you look at are they full-time or part-time? Are they working for other people? Does the entity have complete control and direction over what they're doing? Those are the types of things that you need to look at to figure out whether or not you actually have an employee or an independent contractor. Since it's in the 990, since the information is in the 990, when you're reviewing it, it's a good time to think about this. Every year it'll come up and you'll think, oh, well, gee, Joe really was an independent contractor when we started, but is he anymore? That's employment.
Also to kind of segue on that, we recently, because we're more virtual world today, there's employees that are working from remotely in other states. And to the extent you have remote workers, that is particularly how they're classified is important, because you may be needing to pay, self-employment tax or employment tax in that particular state they reside in, even though your organization is located in another state. So that's one thing to be mindful of. Another is compensation from related organizations. So on the Form 990, you'll report the compensation that they received from this organization, but to the extent you have subsidiary organizations that they're also receiving compensation from, you'll also have to put that compensation in, right? And so just because they're receiving fair market value compensation from the actual reporting organization, the other compensation could come into play. And then also, what we'd mentioned is typically the 5 highest key employees are reported, the 5 highest independent contractors are reported. And so that'll also give, people reviewing the 990 the ability to see whether or not these people are actually being paid fair market value. And to the extent there's questions on that, or you need to provide additional information on it, you'll also want to review Schedule J, which kind of goes into a little bit deeper dive about processes and how much organizations are paying their executives and key employees. Which kind of segues into our next topic, which is the schedules and the wide variety of schedules that they have depending on the organizations.
And before we get there, actually, this will be a good time to address one of the questions that came in. Should you be documenting industry compensation survey annually, or how often? So I think what most people do is that they will document they will, find out what the market is and document it in some capacity at the time someone's being hired or negotiating a new contract or getting a raise or something like that. I think it's probably, if you have a contract with someone where you say, we're going to pay you, a salary of X, and the term of the employment contract is going to be 5 years, and it could even call for increases in pay over time that are kind of small reasonable increases. I think it would be kind of overkill to be every year benchmark to market, but certainly at the time they're hired, and certainly at the time that something is being renegotiated or there's going to be a raise or something like that. So I think that's probably the most common way to do it. But again, it's not like there's a requirement that it needs to be done every so often. It's more, you are doing this to help the future version of yourself that has to deal with an IRS audit. So now I think we're moving on to discuss some of the schedules that are attached on the 990. And the first one is Schedule A, the public charity status and public support schedule. So, 501c3s, for example, come in 2 flavors. You can have a public charity or you can have a private foundation. And very generally, it is more advantageous to be a public charity. Your donors are going to get more generous deductions, and you're going to be subject to less restrictions and rules. And the way you figure out whether you're one or the other is you need to be publicly supported. And that's a term of art. And you have to do a kind of facts and circumstances analysis to get to it. The easiest way to do it is to look at your sources of support and say that 1/3 of them, generally speaking, come from the general public and not from a small pool of, a couple rich families, a couple rich individuals kind of thing. So if you're kind of getting lots of small donations from lots of people and that represents 1/3 of your support, congratulations, you're publicly supported. There is another way to get there, which is by just looking at 10% of your revenue coming from the general public. And then you also need to show that you meet a facts and circumstances test, which we won't go into all the facts and circumstances, but you need to show that your board is sort of representative of the community and the population you're serving, and you're designed, you have the infrastructure in place to solicit support from the general public, things like that. Generally, if you can get to the 1/3 test, it's easier and more certain because you don't have to worry about the facts and circumstances test, but there is that second rung. And another thing to consider is that for new organizations, they have a 5-year runway before they have to start doing this analysis. They're assumed to be publicly supported for the 5 years, and so it takes time to build up this network of donors. So that is something that new organizations sometimes are surprised by. It's like, wait a minute, I have to start worrying about this whole new thing in the next 2 years? Yes, you do. And Schedule A is going to be your opportunity to kind of see the numbers, how they work, and start thinking about, if you're not quite there yet and you need to be in a couple of years, what do we need to do to get there?
Yeah, and then the next couple of schedules, or I guess important schedules, would be more revolved around transactions, such as Schedule R or Schedule L or Schedule R. So Schedule L is transactions with interested persons, which people, members of your board, officers, things of that nature. And kind of going back to the example that I provided earlier, is if you have a contract with a company that one of your board member owns, right? That has to be disclosed. It also has to be disclosed as to what process you went to make sure that that contract was arm's length, right? It was negotiated fairly, whether that board member abstained from voting on the contract, and those should be documented in the minutes. And what they're trying to avoid, is the private endearment of that particular individual. And so Schedule L is the IRS's way of getting more information on those types of transactions. Sometimes you won't have them, but if you do, it's important as a board member to be mindful that you're reviewing those and you're also disclosing those to the IRS. Kind of along the same lines is Schedule R reporting. Particularly for the larger organizations that have multiple related organizations, multiple subsidiaries, a lot of times funds are redirected from one organization to another. And those transactions have to be reported on Form 990 in Schedule R. Schedule R also has you list pretty much every related entity that you have, starting with for-profit entities, other exempt organizations, and then other subsidiary organizations that you may have, including supporting organizations. And so after you identify those, you also identify line by line each transaction that you had with a related organization. And I always always urge people to be mindful of those, because those will come up as arm's length transactions as well. Just because you're in a related organization doesn't mean you can just willy-nilly move funds from one organization to the other, which was particularly an issue throughout COVID, where people were receiving, for instance, health organizations were receiving COVID funds. And just because one organization received it didn't mean that it could go, generally up to the larger organization to be dispersed among the other entities. And so having those, being mindful of those reporting requirements will help board members down the line. Another also important schedule is Schedule C, which is political activities. I always have organizations they're very wary of doing any political activities at all, because they don't want to risk their exempt status. And many times it's not that you can't provide any political activity, or you can't do any political activities, particularly if you have a 501H exemption in place or election in place. But also if there are political activities that you're undergoing because you're trying to salvage the business, right? Some political or legislative action that's going to impact your business, that is allowable. But you may also have to report it on Schedule C accordingly. And then I guess the other one is a big one is Schedule O, which is kind of the catch-all, schedule, which I can see from a page to sometimes many pages, describing changes in your activities, what your activities are, and that's kind of the catch-all for the IRS to look into.
Yeah. On the political side, I'll just add, since they're, with respect to lobbying, which is sort of trying to influence legislation, either through traditional lobbying or through a grassroots effort, there is an election that 501c3s can make. Jameson referred to the 501H election, which allows, we won't go into how to compute it exactly, but it gives you a limit on the amount of sort of money or time of your employees that you spend lobbying. And the 990, it's going to be on there. And the 990 will be your opportunity to see where you fall, how close you are to to that limitation. And we'll give you an opportunity to kind of reassess, okay, we can do more, we need to do less, or, you know, we need to be more careful about how we are reporting our time because, you know, say, for example, you have an executive director and you engage in education and outreach on a certain issue, and you also do some lobbying. Well, you know, you're going to need to have some policies in place, which is going to help your executive director determine when am I lobbying, which is going to count against my 501H limitation, and when am I actually just educating or advocating. So, you know, you may be able to split that time up in a way which is advantageous, you know, towards not going over your limit. And then, of course, just to be clear, you know, lobbying needs to be distinguished from political activity, which would be supporting or opposing a candidate for office, which, of course, a C3 can do none of. C4s and C6s may be able to do some. Let's see, what other schedules are, did we get them all?
Yeah, I think we're getting, well, I hate to say the most important ones, but all of them are important depending on whether or not they're applicable to you. But I think to the extent there are additional questions, we'd certainly like to address those since we only have about 4 minutes. Is this recorded? I believe it is recorded. Correct me if I'm wrong, Jordan.
It is.
Okay.
There is one here about funding that comes from a government and whether or not that is considered public support. It is. Funding from a government will be considered as coming from the general public, which of course tax dollars fund the government. But, you know, it's worth mentioning that the public support rules are a complicated topic worthy of their own hour webinar. So, you know, there are it's possible if you're diving into doing a deep dive of your public support analysis. You know, we haven't, you know, raised all the issues that you need to be aware of for that particular sort of analysis, and that's the kind of time where it's, you know, it's a good time to have a conversation with your tax advisor. And again, that's a good conversation to have earlier rather than later. Let's see, what else do we got here?
I can actually take this one. Does the restriction on supporting a candidate reach to the time an employee spends doing so outside of business hours? Anytime that an individual is involved in electioneering, that is spending time or resources in support of or in opposition to a candidate or political party, if they're doing so in their own personal context as an individual, that's not a problem. Anytime they're doing it on the clock, anytime they're doing it on behalf of the organization, anytime they're doing it using the organization's time, money, resources, that's when you're going to have a problem. But as long as there's a distinction between, say, an executive director doing something as an individual outside of their role as an executive director, that should be no problem.
Jordan, do you typically advise people to, if that is coming up frequently for an organization, when that employee or when that person is engaging in this sort of independent analysis, do you advise them to make that very clear and actually say, I am Mr. X, I work for organization Y, or maybe not even mention it, but they say, oh, everything I'm about to say is me personally and not from any organization that I work for.
Absolutely. And I will say I live in a fairly small town in Missouri where everybody knows everybody else and who does what. So if there is any indication that what you're doing may be tied back to your role, particularly if you are in a very public role such as an executive director, it's important to make that distinction. It's really, it depends on a lot of circumstances, but I always say err on the side of caution, particularly if failure to do so may draw the ire of the IRS.
This is because political activity is one drop will taint the entire thing. So something to be careful about.
I will also say, if you ever read the Nonprofit Times, I actually have an article about electioneering and lobbying that should be coming out in the October edition in a week or two. Because you may be, whether you like it or not, pulled in some political directions, particularly in the next month or so. I see it's 1 o'clock. I will answer one question that came up here about a recording. This is being recorded, and you should get an email with a link to the recording. So if there are other members of your organization or board members that you would like to have them review it, you should be able to forward it to them. Otherwise, I'll kick it over to Kevin if there's anything additional that you have.
Right. So I think that brings us right to 1 o'clock here. So that's going to be it for this webinar. Thank you for joining us today. We hope this information was helpful to you and your organization. A few reminders. This program has been approved for legal education hours. To report these hours, click on the CEU icon at the bottom of the screen. A certificate of attendance, including course numbers, will be emailed to you tomorrow, along with a recording of the webcast for watching and sharing. Also, just please be sure to complete our survey. We're going to use this feedback to plan for future programs that are applicable to your business needs. With that being said, this concludes our webinar. Thank you for attending.
Thanks all.